Let me just quickly ask you guys, actually. So this development deal that Carl just mentioned. So long story short, it's for about 9 houses. The developer's coming in done 90% of the work, so it's pretty much there. They've gone broke. It needs about £400,000 going into it, where you'll be able to pull out. It's got a GDV of about 4.5 million. What a deal. I mean,
Amazing
how many
deal.
of you guys would actually, consider doing something like that? But that's just one of the many deals that, fortunately, we get sent over that's kind of off market, which is great. So I'm sure you can imagine there was many sleepless nights thinking, well, there's a GDV of 4.5 million. How can we go about acquiring this?
That's right. But before we even get started, I know we said in the last podcast that we wanted to go over changes in the October budget that have come in. Now, to our surprise and our amazement, they're not that bad. However, some of the parts are, but for us and for property investors, I don't think it's as bad as we originally anticipated. I mean, the main one is stamp duty changing from 3% to 5%.
A lot.
It is a lot. However, when we're doing the BRR strategy, we're looking to acquire properties that are uninhabitable. So these are properties that don't have a kitchen or don't have a bathroom. And then if they are uninhabitable, you don't pay stamp duty on them. They're exempt. So that's one way that we can get around stamp duty tax, and that's something we are actually looking to do now. I mean, for us, if we are going to take on a BRR project, it can't have a kitchen or a bathroom, because in our area, if we're buying a house for 250,000, what's 12.5 grand, 5%?
Just on tax.
Just on tax. So we're trying to avoid that at all costs at the moment.
Yeah, because that one is quite a large increase on it, really. I don't understand why it's really been brought in, if I'm being honest with you. It's a massive increase for property investors. So if you can't go and find an unmortgageable property, then, unfortunately, you have got a really big increase.
Well, I mean, that's just another downer on the buy-to-let strategy, because you already had a large initial investment to get into that strategy. But now they've increased stamp duty from 3% to 5%. It's even more money that you've got to put on your top line. So that's a bit of an issue.
Yeah, I agree with what you're saying, actually. And that does kind of put more of a damper onto the buy-to-let strategy. Now, buy-to-let's been around for that long. Everybody knows about them, but they don't necessarily work at the moment. As property investors, we want to be able to acquire properties for as little as possible, or next to a zero as we possibly can. But if you're going to go and do a buy-to-let and you've got to put £50,000 a deposit, then you've got your increased stamp duty on top to go and gain £500 a month on your rental as a profit. It doesn't really seem worth it.
£500 is a bit generous.
That's quite generous,
being totally honest. We know people that are actually losing money now. So
yeah, and that's quite hard, If you think about the landlady that we used to have within Coventry, she's got 15 houses and she's living off her savings. How does that work?
I know it's outrageous, but they are all in her personal name.
They are. So there is things, again, there's things that you can change, there's things you can adapt, and unfortunately, she has gone about it the wrong way, where, that is the case. And if that's another point. If you don't know what you're doing in this industry, things will go wrong. You will lose some money. So it's really, really crucial to make sure you know exactly what you're doing, and how to combat certain issues, because they will pop up just like everything. But, with property, you're not just, as a business, you're not just selling £10 supplements online on an e-commerce basis. You're playing around with hundreds of thousands of pounds and sometimes millions. So, in some cases, you just need to know what you're doing, have the right team, the right people around you that can help you elevate your game. Because if you don't, unfortunately, things will go wrong.
No, yeah, you're dead right. But there's actually been some other changes as well. So furnished holiday lets, so your serviced accommodation taxes have been removed. And now they're actually bringing it down to the standard rates, standard residential rates in 2025. Now, I believe this is coming into fruition in April. I think it's April 1st, 2025 that these are going to be coming in. So I suppose that's a bonus for people that are doing the serviced accommodation model. Yeah,
well, there's been a lot of talk around the serviced accommodation at the model at the moment anyway, hasn't there? There's been some changes that we thought were coming into fruition but didn't, and it's kind of a little bit all up in the air. And I do get it, because if you look at the demand of the housing market at the moment, unfortunately, we can't meet it. It's pretty much impossible to keep meeting. So, but with service accommodation, because you can achieve a much higher percentage of your profit if you go down a service accommodation route, depending on the area, depending on the deal, obviously, but rather than doing it to a single let, which I've just previously mentioned. So obviously that was looked at as a whole, really, within the UK to think, right, well, this is kind of not helping with this demand issue that we're currently having. So I believe they were discussing putting some sort of regulation in, maybe equivalent to an Article 4 of HMOs, but for service accommodation. I think they were actually on about doing it as planning permission, weren't they, to try and really cap the amount of service accommodation units in one area at the moment. But I don't believe anything has kind of, actually adapted onto that. So I don't think anything probably will at the moment, especially not under this new government anyway.
Amazing. But one benefit to come out of this October budget is an extra 3.1 billion has been allocated to smaller developers to actually help with the housing demand and to help support the smaller developers. So that's great for property investors and developers all over the country, because it means we're going to be able to actually go out and get finance to finance our deals. I know you can get 100% finance at the moment for ground up developments. So they are making it a lot better.
Yeah, I agree with that. I think if you're a developer at the moment, you're kind of laughing. That's the sweet spot within property at the moment. If you're a developer, then things are going to go in your favour. Because we all need houses, so they're not going to kind of scrutinise developers at the moment, because they're genuinely solving a purpose. So if you can get into that side of the industry, you are going to be laughing at the moment. So there's loads of things the government introduced to make sure that this demand can be kind of helped in a way. Obviously, like permitted development, etc.
Well, another thing, they're actually reducing Article 4 in some areas.
Yeah, I did see that.
Yeah, to actually help with the demand, because we need to build a house every 2 seconds if we want to match the demand, and that is just impossible. We're never going to do it. So I know the government are giving councils standard housing targets they need to hit by a certain date to actually help with this demand, and then they're helping funding these developers. So they're doing the best they can, and with reducing Article 4, it's actually opening up a lot more rooms that are going to be available for people. But I know some people just don't want to stay in the rooms, but in some cases, like Nottingham, where they have actually reduced it, the demand just isn't there at the moment, because these developments that are going up, all the students are going into these developments, and now all the professionals are in the HMOs.
Yep.
I mean, we did a bit of market research not too long ago, and Nottingham is washed, absolutely washed for HMOs. So I'd actually stay away from that area, if I'm being completely honest with you, because unless you can really undercut the market or really stand out with your property, you've not really got a chance, to be honest with you. And especially these old run-down HMOs that people are still charging top whack rent for, they're never going to get filled. So now we need to start looking at other strategies and other things we can introduce to actually help these landlords.
Yeah, you're absolutely right in what you're saying. I think this is actually a big thing for most people to take away from this anyway. If you are currently in property and you are in a large population city where there's a massive student demand, I think this is starting to happen more and more now. So as Kyle mentioned, when we started investing in Nottingham to begin with, the HMO market, which is the one thing that we specialised in, it was kind of split. So half of it would be to students, because there was a massive student demand there, and the other would be working professionals. So therefore, it did create a demand, because the students were always looking for more housing, and so was the professionals. But there wasn't the housing there to offer, so therefore there was a demand. Now, what's actually happened is some developers have come along and started building up purpose-built developments within the area for students, and they've got like cinema rooms, gyms, bars, football pitches. They're all singing, all dancing. They're amazing. So as a student, why would you not want to live there? So, and that's the case. They are wanting to live there. So they're all starting to move into these purpose-built developments. But what's now happened to the HMO market? It's had a negative effect on it, because all of them HMOs that were open to students, the landlords are now worrying because they can't understand how they can diversify with the market. So they're either exiting or they're trying to then get it to working professionals. But as Kyle has pointed out, that's not the case. It can't really work like that, because unfortunately the demand has now changed. So there's more HMO properties available for working professionals than working professionals need. So everyone's got the choice of where it is that they actually want to, go and stay, which is then had a massive effect on the market because people can't fill rooms. So the point to what I'm saying is just by having these purpose-built developments come up within a city, in our case Nottingham, I know it's happening in Coventry as well. I don't know about Leicester as of yet. I imagine it probably will do.
The demand isn't too bad in Leicester. I feel
Demand's
like
still there.
I feel like Leicester with HMOs, you can still get away with it at the moment.
Yeah.
It's quite a hot spot. And Article 4 isn't as dominant as it is in Nottingham.
Yeah.
So Leicester's a great alternative for investors nationwide that are looking to invest in the Midlands. Leicester, Derby isn't too bad, but Leicester's a great spot.
Yeah, no, you're absolutely right. But what I'm saying is that a lot of these major cities are starting to now have these purpose-built developments. So if you didn't already know about it and you live in, say, Manchester, Liverpool, them kind of areas where it's going to start to really come in, it is going to change the market. So if you are, investing in HMOs and you live in a major city where there's a student demand, just be careful and watch out for this change within the market, because we've seen it in our area and it is now going to be spread across.
Well, I suppose the way to combat this is to really make your HMO stand out.
Yeah.
Really offer all the services that other people don't. Make sure you've got en suites. Make sure they are to the best standard, and make sure they are priced competitively.
And the marketing.
I feel like that is absolutely crucial.
Mm-hmm.
Yeah, and going back to your manager, if your manager isn't marketing the property correctly, make sure they do it. Even if it means you providing the photos, go out and get a professional photographer to go out and take these photos for you, because it will make the difference.
Yeah, no, you're absolutely right.
Amazing. So the last thing we do just have to cover is the Bank of England have actually reduced their interest rates down from 5% to 4.75%. So it's not a massive decrease. However, it is a decrease.
Well, it's a bonus swapping out the rest of the budget, let's face it. So
That's it.